Hello everyone, my name is Moonshine. I'm the host of today's AMA with CVEX Crypto Value Exchange, and we have James here with us. He's going to be representing the team from CVEX today. Just a brief intro about CVEX. They plan to build a platform that enables users to create, trade, and clear decentralized, trustless derivative contracts. So during the course of today's AMA, we would see some of their key features, which include zero funding fees, ultra low trading fees, and so many other utilities they plan to offer to everyone. So with that, James, I'd like you to introduce yourself and, the team behind CVEX and how you guys started CVEX as a project.
Absolutely. So my name's James Davis. I've been involved in trading and financial markets now for 26 years. I was lucky enough to be in the last cohort of people who had some exposure to the old-fashioned trading floors where there were colored jackets and people writing on cards and handing them around. And I saw the first generation of electronic trading and high-frequency trading all the way through to the crypto revolution, which I've been part of crypto since 2017, turning down in 2012 somebody offering to transfer some Bitcoin to me at a very low price, which I wish there had been Wi-Fi at that location. So looking at those markets, I've been involved in lots of different trading things for major entities. But what I really find interesting in this space is how we've grown, but some of the key parts of TradFi hasn't come across. And so here with our team, we worked together on a few different projects, which we've set up for other people and got going. And we now have our dedicated team for this for the last few years. We have a lot of people who worked around Exonum and Bitfury in the early days, including our CTO. And my business partner, Matthias, has built and sold a number of businesses and been an entrepreneur since the beginning of his career. He really has his finger on a lot of the stuff that you see externally for us. And what we're trying to do and what we think we've achieved is we think we've brought the first capital efficient platform into this space. And from a capital efficiency perspective, this is something which we think is game changing for most of the people who are trading in the derivatives markets at the moment. So 65% of the money that gets spent in crypto completely gets spent on derivatives trading. 25% gets spent on spot trading, and everything else is sort of a rounding error on the end. L1 fees, all these huge great L1 tokens, they represent about 1%, and stablecoins is about 1%. All of DeFi together is about 12%. So derivatives is 65%. That's 240 billion transacting, trading through it for about 40 trillions worth of transactions value in derivatives last year in crypto. It's an enormous marketplace. And what do I mean when I say capital efficiency? I mean, if I was to try to trade some of these products in traditional finance, the way that they're traded in crypto today, people would just laugh me out of the room. It's so expensive to trade these products. If I trade a spread like I buy Ethereum and I sell Solana, I expect the entity that's on the other side of that, the exchange that's managing it for me, to reduce the amount of collateral and correlation. There isn't a day going to happen when Ethereum goes to 0 and Solana goes to 10,000 on the same day. So why do I need to hold the capital to cover it? It needs to be appropriate. TradFi wouldn't hold us this, so why do we go for fully collateralized in crypto terms? It's nuts. What we should be doing is we should be working on the same basis as TradFi. We should be having the risk-adjusted amount. So if I do long 1,000 Ethereum, short 13.8 million Solana, and I go to almost any large centralized exchange or DEX at the moment, I'm going to have to put down something between 680 and 700,000 in capital. You come to us, it's 300,000. That's a massive difference, and that scales up and down. It doesn't matter if you're trying to do this trade for $20. If you're trying to put $20 worth of collateral down, it's better to put down 20 than it is to put down 40 if the 40 is not gaining you any value. So we've built this platform now, and it's going to enable people to come in and trade. It also means we introduce futures properly, and futures are dominant. For every perp that's traded, 10 futures are traded around the world. Perps are a very simple thing to implement, but they don't have the right mechanics for people to hedge, for lots of different people to come together. They have these funding fee concepts in them, which makes them very manipulable. Whereas our platform doesn't have any of these. You can carry the trade for a lot longer. And that combination of being able to not have a funding fee and to be able to offset collateral means that suddenly lots and lots of different trading strategies are available. We don't just have to look at a chart and trade the chart. We can trade all sorts of different trading strategies, get a lot more innovation, a lot more capacity, and suddenly open up the market for lots more people to partake in that. We're the first place that you can do this in a decentralized way. We think it's only just now that the whole crypto technology stack is ready for this to be able to come in. We've built it, we've delivered it. We're the fourth most active contract on Arbitrum for it. We're doing millions a day for not a huge amount of capital locked up. And we're looking to explain all of the tooling and everything that's around it and have people come in. And then we're going to do our token generation. We're trying to do it as soon as we can. And when we get our token generation done, then there'll be rewards and drops and so on and everything related to that. So now is the time to pay attention, put some liquidity in, fund a wallet, and help us show that this should be listed on a good place and should be owned by a big community. So thank you, Moonshine. That's an intro.
Yeah, thank you so much, James. That was a very detailed overview about what you guys are offering and like the structure of your system. I really appreciate that in-depth dive into all of that. So I think the first question I wanted to ask was you elaborating on CVEX advanced portfolio risk management system and how it enables higher leverage for well-balanced positions through the value at risk margin calculations.
So value at risk is the industry standard outside of crypto. Value at risk means we look and say, how much collateral do you need to cover this position? What we do is we look at a correlation of all the assets and we run them through that matrix and we say, okay, what's the potential loss of this? This is the amount of collateral that you need. Every single time that number is going to be a magnitude lower than the numbers that you see in crypto today. If you do the same, just single contract, you go long on Bitcoin, it's not a ton of difference. But if you start to do calendar spreads, you start to do statistical arbitrage trades, all of the different mechanics that people will read about in the books for how trading operates, then you suddenly have a lot less capital locked up, but the right amount of capital. So the risk isn't changing. The amount of default isn't changing. But you're just not locking up unnecessary capital with an exchange that's not doing anything with it and not benefiting you. So you can trade more. And that whole engine, there's lots of stuff on our website about it, but it's all that big correlation piece.
Nice. Every project that has the aspect of trading, risks is definitely something that should be expected to be taken. So how the team implements strategies that helps to mitigate this risks is very essential. Thank you so much for answering that question. Now, aside from that, I see that you guys want to implement or facilitate gasless trading. So, what measures has CVEX implemented to facilitate this trading, and how does this feature enhance accessibility for users with varying levels of technical expertise?
Okay, so this is the gasless piece is about all the deposits and the withdrawals, and we're not putting the gas fee in their dynamic, but there is an operational fee and it's fixed at a level, and that's roundly nets out to zero across all of the operations of the business. So as you don't have some big dynamic aspects to this, but we're bringing Orbit in, and Orbit will be there in 2 to 4 weeks time. And when Orbit's delivered as well, we're talking sub dollar cent. So it's going to be sub-cent costs related to making these transactions in, and you don't have deposit and withdrawal fees in there. So that suddenly means that you can bring money in and you're not having to spend your time worrying about gas. With all of the complication of running all these platforms, it makes sense for us to be batching these things together and pushing them through and having very fixed low operational fees that give you predictable behavior that you can understand, and you don't suddenly have big issues when you're coming in and out. So the whole issue there is to try to make the platform feel more user-friendly and not where you're seeing big random costs from a DeFi project.
Nice. And while you guys are definitely trying to attract and retain providers, especially liquidity providers, because liquidity is the backbone of every project. So can you discuss the strategies you guys have implemented to attract and retain liquidity?
Yeah, absolutely. So we have a market maker scheme where we take a portion of the transaction revenue and we tell them that we will make that available to a closed pool of market makers for a very long time as an incentive to market makers through the next year or so. And we are at the point where we're maxed out in the subscription. We've got one seat left and we have 3 or 4 people vying over doing the material to get that to place. So attracting people who want to provide liquidity to this is not a problem. And that's because they have strategic goals in mind. They want to have more platforms like this. This represents a first alternative to Deribit when the options come online. This gives them a place where they can reduce their accounting cost for the amount of trading because it's not held on their book and it's held through a platform that runs in the right manner. So we're getting lots of those people approaching us and pushing us to do it. And that puts us in a different place from every single protocol that's out there. And I know probably a lot of people here have made money on the runs of quite a few different projects that have launched and then grown quite rapidly. A lot of projects are paying the market makers and paying the liquidity providers out of pocket substantial amounts every month. And they're doing that to make sure that the volume looks good so as they can pump and sell their token prices. And if they do that, the day that they stop, somebody's left holding that. And I see some really big headline entities today that are providing 10 basis points in transactions back to a whole bunch of people for every single transaction that goes through them. And that means that the last person to put the money in is the one that's going to get stuck holding it when it goes. Now, we're different. We're not paying these guys. They're getting a share of what we managed to build here in transaction fees for putting their liquidity through at the beginning. And that puts us in a very different, very sustainable place. And they get that in transaction fees, which is in USDC, the same as our affiliate scheme pays out in USDC for a very long period. So this is really about trying to bring this community together and sharing that upside with the affiliates who are making referrals, with the liquidity providers who are coming in, with brokers who introduce people for big clips of stuff coming through. So there's lots of different aspects. And then the stakers get a portion of this. So if you're holding our tokens and you stake them when we turn all the staking and everything online, then that will mean that you'll get a share of 20% of the transaction fees, assuming that you take part in the governance. But that's in stables. So this is going to be a token which yields stables. And that's much, much better. That gives you a much more deterministic view of I can have this project and it will just yield stables for me. And it's a good, solid investment token. I can take this much. I can predict what it does its yield over time. And it can be a backbone asset of people's longer term holdings. And putting all of that together where we don't have skewed incentive models, we've got long-term value accrual pieces in it. We've got money going back out to the community in each of these different forms. That puts us in a place where this is a proper community project, not 5 guys who've built something and are then hyping it by persuading large people with balance sheets that they can give them a bunch of free tokens and they can get out first. We're not another one of those. We're something that you can sit behind for a long time.
Interesting. Really interesting. I think something I just took notice of, and I think you also mentioned that is how you guys are able to utilize USDC as a primary collateral token and still maintain stability through this means, because we have so many projects that would probably just choose to use their own token, but it's how you guys dynamically USDC still maintain sustain the ecosystem. I just want to say thank you so much for also touching on that point. So I think let's move. I think we've been going, there are so many real utilities that you guys are offering. So, but let's shift our attention a little to the CVEX token itself. So could you walk us through some of the use cases within the ecosystem that CVEX token serves for?
So the core aspect of this is its governance for the DAO. So that's the core thing, is that it's going to vote on what we do and how we do it. So what's the DAO doing? So the DAO is running and operating the clearing protocol that this platform operates on. But as we see other people launching, and we're talking to multiple gas exchanges, we're talking to nickel exchanges, we're talking to people who want to launch platforms for real world assets to trade. If they were to launch those real world assets using perps, they're going to triple the cost of trading. So they're not going to be able to compete with TradFi. So they need to be able to list these things in a cleared form. And for them to come to us and launch it, that's when the DAO is going to say, okay, we need to do specialist risk for this piece. We're going to spend some DAO capital on building a warehouse receipts platform. We're going to give a grant to this platform to support them in launching. And then it will take 20% of those transaction fees back and push them back out again on the other side. So that's where the DAO really gets involved with building out this protocol over time and making sure that it runs independently and making sure that it has all the necessary assets to keep up. And then the platforms do their work to do their marketing and spread out the remaining balance of those tokens among everyone, spread them to affiliates, to market makers, to brokers, to everybody that's around that space. So there's a really cohesive aspect to all of this, where the token has a very important role in that governance and has an appropriate yield based on the success of that governance, but you're really looking about sustainable action out of it. So this is infrastructure, but infrastructure with a place in that 65% of the spend in crypto, not a infrastructure in that L1 space, which is 1% of the spend. There are not very many tokens which are sat in that 65% space and are also trying to make an infrastructure play. So we think this can be absolutely massive, and we will start with a relatively low price to get people able to take and come on that journey with us rather than just acting as the exit for us. And we're locked up for 4 years, so it was the exit for me.
Thank you so much for that. And just because we're still on the token, okay? So now, while going through the website, I there are some operational fees that need to be paid here and there. So how is this covered? How is the tokenomic structure built in such a way that we have some percent allocated to this cost?
So that comes out of the collateral. So all of the fees related to trading and everything on the transaction fees, all the rewards and everything is done in the collateral token, which is in USDC. So then 20% of those transaction fees go into a pool that becomes available for the staking. And then when the staking's on and available, people will receive that pool of USDC assets back. So the token is going to yield, think of it more like a bond, where you buy it and then it yields in USDC, and you want to know whether the price versus yield is appropriate. And if this gets the volume in the way that crypto markets do for derivatives, then you will find the price is a function of the yield depending on what else is available out there.
Nice. And since we're still on the topic, for the staking aspect, I say it comes in different tiers. So let's say I get involved in one of the tiers. Is there like a penalty for staking before the period of locking, or you just get to unstake at any time you wish to?
So you, if you have to stake through each of these periods that we will be running it for. And if you are staked when a period is run and you partake in the governance, and that'll be something like a monthly basis, we are still going through the details of that, then you'll get the reward for that period. If you unstake during that period, and then you won't get any or partake in that particular round.
Nice. Thank you so much for going through that. So now, in terms of security, I just want to know, and transparency. Social projects, investors want to know the back end, in terms of security. So are you guys audited? I see your KYC, obviously, and so are you guys?
We're not KYC'd because it's fully decentralized, which makes a big difference from a lot of projects. But we will do the sanction checks on the wallets. And because we're not accepting cash in it, this is all decentralized and permissionless. It starts in that space where anyone can access, but you can't move money from one wallet to another within our system. You can't swap it to another asset. You can only use it to trade and then pull it back out to the same wallet. So we're not creating a place where people can hide and move money around effectively. This will not be a good place for people who are attempting to hide what's going on with those transactions, because they're just going to bring the same cash back out to themselves. But then all of those mechanics, all of that clearing, all of that security of course we audit, and the audit, I think I've seen draft pieces. I can't remember if it's been published or not, but we'll be publishing the audit, and that will enable people to go and see where we are with it. A lot of the code will be coming out open source. We're providing the tool sets that we've built to assure how it works, all the fuzz testing tools across to the Arbitrum community to be able to use on top of what they're building for Rust projects. So we really think we're at the cutting edge of how to do that effectively. But the security layer starts and finishes with the fact that you can only deposit from and withdraw back to the same wallet. You can't go and push money in and move it somewhere else, which means that people who were able to exploit anything still can't move that to another wallet. That's really fundamental to making sure that that's super clean.
I appreciate that answer. That. Now, for CVEX as an ecosystem, you guys have a variety of target audience, okay? These are people that actually understand what you guys are trying to bring, the problems you guys are trying to solve, and the utility that would keep you guys in the space for a long term. Now, aside there's something that sets you apart from every other regular crypto project out there, because you're not just a regular traditional meme that people just come invest. You need people that would actually understand the use cases of reaching these consolidators, these target audience. What approach are you guys using that is so different to reach this particular audience?
So first of all, I think everybody that's in crypto thinks of themselves as a trader. Everybody's been looking at charts, looking at data. Everybody's got an opinion on where Bitcoin's going to go. Whether it's a good one or not is different, but everybody feels that they need to get good at trading. Every book written about trading out there talks about statistical arbitrage, talks about calendar spread trading, talks about the mechanics of laying risk off in different ways. And they all come at it from the perspective of portfolio risk and futures. So all of these massive wealth of opportunity on how to trade that's been applicable to stocks and things all around the world for years suddenly becomes applicable to crypto when we're here, because you can do all of these trades with us without getting squeezed out by funding fees on the perp, without just being squeezed out of a position to liquidation because of funding rates on some odd pool that doesn't behave like a trading algorithm says it should, and not having to put too much capital down to be able to take advantage of a statistical arbitrage trade, which erodes the value of what you're trying to do. So there's lots of these mechanics that suddenly become available. So what we're expecting is that everybody out there that wants to trade more, that really wants to understand trading, will start to migrate to us. The people who want to be more professional. If you have to go to a centralized exchange and after fees, Bitcoin's got to move $80 before you cover your fees, and if you come to us and it's got to move $11 before you cover your fees, which is roughly true if you're putting about $100 in to any of the centralized platforms or us, well, you can trade 6 times on our platform for every one time that you can trade in the other one. You can go in and out of those smaller movements and make a profit. That's day trading. Day trading is essentially banned by the centralized exchanges because they've set their fees so high. If everybody here that looked at GameStop, that looks at everything else and says, oh, I think there's a small movement here, I could take advantage of it, but doesn't because the market's fees prevent them from being able to do it, that they're offside so quickly, they can trade with us. They can trade relative value with us between different things. So we think we're going to get more and more of those people on that professional end of trading. And then that brings us into this new world that's coming in with AI. And everybody, I was in East Denver last week meeting tons of people, and everybody who is trading is building AI tools around trading at the moment. And AI tools mean that you need permissionless, because that makes it a lot easier. You don't have to go and build lots and lots of authentication layers to it. And that makes no code not work. We're permissionless. It needs an API that's clean and easy to understand. We have an API that's clean and easy to understand. There are almost none in the whole of DeFi. There's certainly none that look like an order book that AI tools would easily go. We've published it and made it available. It's got low cost to do everything in that's predictable, so you can use the trades from it. If you are into no code API development, for building trading tools, or you're keen on trading and trading strategies, or you want an asset where it's going to yield something in USDC over time and it's got an infrastructure play as well. There are so many places where we're bringing all of these different threads together that have been needed across the marketplace and making them work for institutions and retail on a level playing field. And we know the institutional guys are interested, and that brings liquidity. We know a lot of retail people are coming so far, so we are talking to everyone about it. And then if you introduce your friends, you get 20% of their transaction fees for, I think we've got some term like 5 years in there. But we're trying to make that really long term, because we know that they won't start making money in 3 to 6 months. And most of the affiliate schemes where people introduce someone aren't worth anything, because you go back and suggest a good trade and the affiliate schemes run out. And if they introduce people, you get 10% of that. So there's a really big community drive. And that's what we need to bring together now. If we want to see these things come in, we want to come out of this period of where we're all worrying about what token prices are going to do, then we need tokens that are infrastructure, tokens that are derivatives, tokens that have got a good prospect behind them, where the team's not trying to hold on to too much of the money, where you can make a good return and promote it. We're bringing all of these things. We're hitting those AI trends. Our Telegram app has just gone live, and we're rolling that out to people. And Matthias, our partner in this, he'll be very, very proud of where they are with that today. We have 6 million people in this community. It's the 3rd biggest DeFi community, with the 4th most active contract on Arbitrum. And we're a month and a half in, and we're telling people to slow down on the institutional side. It's just set to go, and we really want to see as many people come in and get involved as possible. So come in, put $20 in, test it, understand it. Don't put in anything you can't lose, but come in. This is the right place to learn and understand trading.
Very interesting. I think I really appreciate your answer, because I see how enthusiastic you are about every single crypto enthusiast. I think that's something that is to be noticed by every team or project owner that are trying to reach out to investors in the space. And the fact that you have most of these needs tailored to individual crypto enthusiasts is something I must commend. So thank you so much for having to go through that. Now, before we move over to community questions, I'll still like us to, just discuss some partnerships you guys have, probably with projects that offer similar utilities or organizations and companies in real life, and the kind of partnerships you guys are looking to have too.
Okay, so the partnerships we're trying to build, we've got a number of exchanges that are trying to launch their own products for real world assets, and so we're trying to go through the process. Those are long, so we're talking to groups like Saudi gas companies, and they are long projects. That might be 18 months for them to be able to get that over the line, but those really grow out. We're trying to do some deals in Indonesia where we get access to brokers and we get the right sort of group that has the regulatory licenses covering them, and I'm very close with those guys, and that will allow us to bring on another 20 million people who can't touch DeFi projects and derivatives today, and do it in the right way. So there's lots of these different mechanics. And then in the medium term, we see all of these current DEXs and centralized exchanges that are offering transactions. We see them being able to use us as the clearing engine, that after the trade is complete, that they can book it into us to reduce the collateral utilization and let people trade more. And then everyone can trade on their favorite platform. And we don't really need to own that piece in 3-4 years' time. We'll make those offerings. We'll have those platforms available now. But if people want to come from the large centralized exchanges and get capital efficiency and use this platform, then we'll be open to everyone, and it'll be equality of access for it. And that means we can have lots of different platforms doing the sort of ECN route, if anyone's from the stock space, where each of these does their own creation of prices in each country, but the clearing layer just gives this massive capital efficiency to everything else. We really want to scale that up until this is a capital efficiency layer for lots and lots of different assets. It's inspectable. We don't have the 2008 crisis problem, because people can look at it and say, we don't have the FTX problem, because you can look at it and you can say it's in DeFi. This is what the assets are being committed against. This is what the total risk in that system is. This is what the default fund looks like. And we don't put ourselves ever again in the problem where we have these market dominant entities that we all have collateral with, that we don't really know what they're doing or how they're incentivizing it, that this is all out in the open and it's a level playing field for everyone. And we don't get the institutional players who know stepping out just before it takes all the rest of us out. So everything transparent, everything run the right way, everything accessible.
Nice. That I really appreciate your answer to now as well. So I think something else that caught my attention that I'll just quickly want to chip in before we get to questions from the community, because I see some questions are being sent already. Is about the CVEX auctions. So how do you envision the on-chain auction mechanism optimizing price discovery for settlement? And will it relay like on a hybrid approach involving off-chain price feeds and oracles, or will it be fully on-chain?
So you can't be fully on-chain if what you're marking to is something that the price is being determined off-chain, which in a lot of these assets, the spots price is determined on centralized entities. There are some incredibly good projects out there, people like Block Skulls, who do a really good job of bringing that data together and putting it out in an oracle in the right way. And we would like people like that to be able to run aspects of this. In the short term, we will use oracles that will look at leading centralized exchanges, drop the outliers, and use those for settlement. We only have to call settlement once a month. So we only have to bring all those cash flows back together once a month. So there's a lot of focus on making sure that we do that in the right way at the right time. And then the mark prices give us an indication as to how much capital is at risk as we run through that process and it builds up. Now, options all mark to the underlying price. They will cash settle against the underlying price. And that's where you strip the risk piece out. How much capital they need in the in-between time is a function of the volatility. There's a very, very standard ways of doing all this, and we will take those, and the market makers will help us create the prices. And then a lot of the flow will be done OTC and away from us and be brought in. And we know that. But the prices will be there and executable so as people can come in and trade against them and make sure that they are therefore valid.
Nice. I really appreciate the concise answer from some aspect of what I wanted to ask. But I have a few more questions, but then again, I just want to open it up to the community to ask a question. But it was a very interactive, and I really enjoyed the interactive section with you. So let's see the questions our community have to ask. So let's have Elsin, you have an unmuted. You can ask a question now.
Hey Monshine, thank you for having me. Hello, James.
Hi.
Hi, good. So, I have just a quick question to ask. So, it's what role do Oracle play in CVX's infrastructure, and how does the platform mitigate Oracle manipulation risk in derivatives trading?
So I missed the first part, but I think what you're asking is about how the oracles prevent the manipulation. So the key thing here is that we need to determine when the price is offside to make sure that the liquidation is there. So if you've got a trade and you're in a losing position, the question is, how do we use price to determine if you should be liquidated? If we just use the last traded market price, then you are always going to be subject to people in a thin market that can put transactions through and make that go. And certainly the first thing that we saw on the first week when we put it live with some of it. So our skew is to weight this between the last traded prices and what we call the mark price. And the mark price is the underlying prices plus what the average basis has been over the last sort of week, skewed towards the current time. And that gives us an idea of where the fair value for that market is. And the further the last traded price goes away, the less value the last traded price has relative to that mark. So the last traded price moving a few ticks away can be considered to be leading what's happening from the liquidation perspective. But a mark price that jumped massively away is assumed to be manipulative, and therefore we default directly to the underlying price plus the basis, and that stops you being liquidated by people who are hunting to try and move that stuff around. And we won't publish it. We'll publish how that works, but it's a function of liquidity, so it should therefore not be gameable.
All right, great. That's I really appreciate the transparency and the thoroughness of your response. And based on what you shared, I'm pleased to see that CVX has implemented robust measures to protect its traders. So that'll be all from me. Cheers. Thank you.
Thank you.
Yeah, thank you so much, Alison, for throwing in that question. Really appreciate it. Ted, I think Jordan, you can go ahead with your question, please.
Yeah, thank you so much. Hey James, how's it going?
Hey, good. How are you doing?
Yeah, I'm all right. So basically my question is gonna be how CVX ensures that front-end operators maintain high performance and security standards while offering diverse services like the gasless trading and order routing.
I mean, so we will set a standard with that in that we will be able to provide a front end that people can use, that we can test and verify. But part of the knowledge of how you grow these things is to know that you will not be able to reach into every single community. So our platform doesn't represent data in Korean. We will not get a Korean audience to come and use that. To be able to get adoption and understanding and communicate to that group of people that this is good, we will need a local partner to take it, to customize it and push it out there. We're decentralized. So from that perspective, we then are not going to be able to trust. So we will have to find some mechanics within the community, within the Discord, to say, these are the platforms that are well known to work well and trusted well. These are the ones that have been tested, and publish information. But it's got to start to become a community resource. So we'll make sure there's always a high quality pattern for how to do that. But then we will see others take that and specialize it, and we will not be able to assure them. That said, we have some people who want to connect with platforms that are running on a subscription basis to provide connectivity into the platform for really good quality trading and automated trading tools. And we would like to see them connect over the next few months as we bring our options market online in about 5 months, or less than that, 4 months from now. And if we are able to bring those in, then they're people who will be signing contracts against people and saying, all right, it's $50 a month to use their platform. There will always be an alternative. There will always be our free thing. But if you're a major trader that wants to be able to take advantage of tools that will TWAP you into different things, then they're probably going to be a good choice.
Yeah, thank you so much for. Yeah,
Okay.
it does. Thank you so much for the answer.
Thank you.
Yeah, cool. Thank you so much for throwing in that question. So let's have Alexandra. Alexandra, you can ask the question, mate.
All right. Hey, James.
Hey.
So my question for you is, how does CVEX's range order system compare with Uniswap's concentrated liquidity model in terms of capital efficiency and user experience?
So it's not an AMM. It's an order book model. So you put an order in at a price. When you put an order in, you can put an order in that will go through a price, but this will not be an AMM. Once you're executed, you're executed. So it looks more like a traditional order book that you would see in every single other asset class around the world. And it does that because that's the way in which futures liquidity provision works best. The AMM model has been really good to create a way to get some liquidity on chain for DeFi projects when gas prices have been very high and we can't afford people to come in and out and adjust prices. But it doesn't give us an ability to give anything other than a linear risk response as someone providing a liquidity model. And that's not how almost any market works. Our risk on one versus the other should not be linear. So an AMM is not a good way for anything that's high value to be traded like this. It's just a way to reduce gas fees to get liquidity going. I've been part of building and using AMMs in other projects, but this is not AMM based. So there's no equivalent in that space. This is order book based.
All right, thank you.
Thank you.
Yeah, thank you so much, Mr. Alexandra. So let's have Chris AD. Give me a moment, I'm trying to unmute you. Okay, Chris AD, you can go ahead with your question. Hello, Chris, you have to unmute your mic to ask a question.
Okay, thank you very much, Moonshine. I got a quick question about your collateral and stability aspect of the project. So I would love to know how does the integration of the CTP enhance user access to the CVEX, and even though it operates on the Arbitrum ecosystem?
So CCTP is circles of. Sorry, yeah. So Circle CTTP is the mechanic for interacting across chain that's built into Circle. So using that, you can take deposits from Ethereum, you can take deposits from Optimism, and then over time, lots and lots of different chains, and you can push them into our platform and conduct transactions from there. And roughly 50% of the assets that have been deposited as collateral have been deposited, well, half the transactions have been cross-chain transactions. Don't know by value how much it is, but half the transactions have been cross-chain, which means that it really is cross-chain ready out of the box. And we'll see more and more chain access via CTTP added. And we want to be in a position where it runs on Arbitrum, but people don't really have to think about that. We're running on Arbitrum because with Orbit, that's a really good place to put high quality, well-validated, high-frequency throughput through. But it shouldn't be something that the end user has to do. If they're in favor of using Solana, they should be able to come in and access it from their wallet in that space. And we'll take advantage as CCTP is rolled out further and implemented more broadly to always support those protocols.
Quite impressive, quite impressive. They've got lots of questions to ask. I did want to ask about your targeted audience, because looking at the project, it's quite unique. So I want to ask you, did you guys have a targeted audience? Because while you were speaking, you did mention about the country in Asia. So I would love to know, do you guys have a targeted audience?
So it's multi-dimensional, and we've got more than one team looking at different audiences, because these sorts of projects only work if you can bring retail and institutional together in the right way. So if I talk about the number of users who will be doing it and what the number of interactions will be, then I will expect that to be on the retail side. But if I talk about the total value of trades that go through and the volume of it, then it's going to be on the institutional side. But that's one of the myths of the market. When you really dig into Binance, 90% of the volume is institutional. The top 20 players on there represent 60% of the value that's going through it. So it's not spread across an awful lot of people. And we know that that's going to be the way for all of the options business and everything else that goes through this. But we want to create a level playing field here where people are not having differentials in pricing, where you are not disadvantaged because you're not an institutional, where all of the fees and the structures are all transparent and available to everyone in exactly the same way. And that's what we're building. And therefore, the TradFi values that we put into this are the values that the retail people get to pay when they come and use this. They're not subject to us charging an extra 2 basis points for them to have access. So that's where these big differences are. But then from a token value perspective, if you're buying into it because you understand it, you can see where it's growing and it's got user adoption, and therefore it's got resilience and that it's not going to disappear on you. And you really want to have access to a token where it's going to get some institutional adoption, because that's going to drive the value, that's going to drive the staking value of it, and the yield on the staking value will drive the value of the token. So you can balance between these two things yourself. And if you want to get in early and hold while we go through repeated growth cycles, as we go to the institutional players, we'll get loads of them on board, but they'll each be on board at 1-2% of their market, as they were for something like copper. And we will have to show them lots of repeated orders, lots of growth, and lots of mechanics to go through 3, 4, 5, 10, 15% wallet share in that option space. But as that accrues, and it accrues gradually, there should never be okay, now today's the day that you must get in. It should just accrue through that naturally. And then you get the yield price response, and you'll get good price return, but you'll get decent yield return. So really trying to bring those things together in a cohesive way and enable lots of people.
Awesome stuff. That's quite amazing. Thank you very much for the great answers. Thanks once again, Moonshine.
Thank you.
Yeah, please. Let's see if we can get in one more question from. Okay, let's have Jason. Let me see. Sorry. Okay, Jason, you have been allowed to speak. You can ask a question. Did I unmute Jason? I don't know. I don't know if Telegram is just messing up with me here. I can't find Jason on the mic. Is it did I mistakenly mute you or kick you off? I'm sorry. Just try to rejoin and raise your hand so I can see if I can unmute you. Okay, let's just give it to a few seconds. So while we wait for Jason, if it doesn't come up, then I might just call one last person. Let's see some community text questions that were sent in here. One of the question is still asking about the in terms of, I think is asking about the auction mechanism. So he's asking, in terms of physical settlements, what challenges do you foresee in integrating asset digitization, warehouse receipts, or safe receipts within a decentralized framework? Are there partnerships in place to facilitate this?
I mean, that's a much deeper question. The warehouse receipts mechanic outside of the London Metals Exchange is not particularly well advanced. So there are a number of warehouse receipts platforms out there and custody entities that can provide that. And it would ultimately have to be a settlement against the delivery of a warehouse receipt system with some sort of mechanic of a penalty for cash for people who weren't able to settle it. But that's really looking at things like metals and oil, not crypto. So that's enabling the world to launch a lot of products. I think we will see cash settled versions of all of those initially, which is the same thing that, say, CME works on for NYMEX. And then over time, we will start to see people talking about, all right, how do we do this for smaller markets against a physical settled method? And that's where I hope the community will be building stuff and charging people for the delivery of tools that are built on the side of us, or someone will say, this is how we want to do it, and we'll apply for a grant to extend our code to be able to do warehouse receipts on their side of it, or SKRs for gold or something like that.
Nice, thanks for bringing that question. So let's have James. James have been unmuted. James, you can ask a question now, mate.
Guys doing?
Good.
Yeah, so basically my question is how does the project balance decentralization with ensuring that all investors and developers remain aligned with the original mission? Basically as more stakeholders join, sometimes the interest may shift away from the original mission. So I just wanted to know how you guys just balance everything up. Just talk more on that.
The Polkadot problem, yeah. So this is probably the area where I've not seen this done super well across any projects, and this was a debate we were having earlier in this week, there were talks about appointing of councils and things like that to be able to oversee and set stuff off. That doesn't really work. That goes against the decentralization mechanic. So I think having forms of constitution that represent how that DAO is going to vote and what the different voting levels are that are needed for different things is very important. So you need to be able to establish that there's not just a vote of a win of 51% within the voting community, which might be quite small, but above certain metrics for different types of things. So deployment of an updated protocol for a fix or something like that might have a much lower metric associated with it than the deployment of marketing grants. So this is the lesson that we see Polkadot's had. Now, I would like to be in a position where people can appoint individual council members that would have things, but I don't think that's going to fly in terms of the regulatory standard with a lot of different places in the moment. And that wouldn't be me. So if I will sit in the labs business and say, this is my strategy, this is what I think we should do, and I'll put in applications to the DAO for the comprehensive things for each 3 months and say, this is what we want to build, this is how we're going to spend, this is what we should be doing. And labs will be a break-even business that's not trying to generate capital out of this and just serving that DAO. Then I'll put those proposals in. But other proposals that are coming into that DAO, we need to find those mechanics. I've got 2 people focused just on building those, and I trust these guys a lot. And then we've got 2 law firms that are giving us, you can do this, you can't do this, this is how you remain decentralized, and they're proper grown-up law firms. It's MLL and MME in Switzerland, if people want to go and look them up and say, are they using the right people? And the guy leading the other side of it is Jules Ratcliffe, our CFO. So again, go and look him up on LinkedIn. These are the people who are setting these agendas for us. But that's one of the narrow, we have to thread that needle in the right way, because we want to hold on to that decentralized status and drive and set the agenda on how regulation is written for decentralized entities. We don't want to be a victim of other people writing that. We want to drive that narrative. And I think I said at the beginning that one of my former bosses is now the Trade and Commerce Secretary in the US. But another good friend of mine who I used to work with for 7 years was the SEC member, was also at the big crypto council at Trump, and he was 2 seats down from Trump on the other side. So I really am in contact with a lot of these people in the right way, and we want to be able to set the agendas on how to do it. We're not anti-regulation, but we want to make sure that it's done in a way that enables this level playing field where we don't end up with stuff skewed to people with the deepest pockets, but everybody can play in the same way.
That's awesome on my end. I love the effort you guys are putting into this. And yeah, that's all from me, man. I wish you guys best of luck in everything you do. And so, yeah, thanks, man.
Yeah, thank you so much for jumping on the mic with for jumping on the mic to throw in a question. So I think those are all the questions we'll be taking for today's AMA, guys. We've fast spent some minutes past the 1 hour duration, and I just want to take this chance to say for the little end delay on my end at the beginning of the AMA, I'm sorry about that, James. It was just Telegram word. And I really enjoyed the section with you because it's so admirable to see that there are still projects that tend to build something with real utility and on a long term in this kind of space. We know the market is currently not okay at the moment, but at least we know that despite the volatile markets, you guys are here to stay because you're building something very solid. I just want to say a big shout out to you and your team. And you came out here, you presented about CVEX in a very knowledgeable and inspirational way. That shows that goes a long way to show that you guys are very knowledgeable about what you guys are building in depth and not just on surface area. So I just want to say thank you so much. And for those who brought the time to ask some insightful questions about the project, thank you all so much for doing your research, coming out here to ask thoughtful questions. Don't forget to join CVEX social links. Follow them on Telegram, follow them on X, follow them on your social links, because that is where you get updates about CVEX. So before I close on the visa, I just want to give you, James, a chance to give the final concluding statement.
Yeah, so I think try to address the things that I hear in the channels all the time. We're trying to get to TG as fast as we can. We are in negotiation with exchanges. The paperwork, the load, the material, the due diligence is high. We are told very directly by them that if you say that you're negotiating with the exchanges that we're negotiating with, then they won't do it. So we can't say, but we are going as fast as we can to get that out. And the moment that comes out, when that determines for us exactly what the price level is, then that functions all of the airdrop mechanics that we promised for people in the test. Now, all of that stuff becomes crystallized at that point when we have that TG, and we want to get there as fast as we can, but we want to have it at the absolute best entity that we can get it to, so you can really get the value out of it. So for everybody on here, look at our socials, come and join, put a small amount of stuff through, come and try, tell people about it. These projects and us having more projects here that are real, that do good things, that grow and have real value, comes by us all telling everybody, I've checked this project out, this was good, I listened to this AMA, I will be on lots of other AMAs with lots of different communities. Throw in, come with ideas, and if anyone sees me at a conference, pin me down, I'll buy you a drink.
That was really nice. Thank you so much. It was nice to meet you once again, James. Thank you all so much. See you guys in the next AMA.
Thank you all. Take care.